how bad are the numbers? But look at the stock in after hours.
Well, look, we knew what the stock was going to do to some degree in October because we knew how bad these results were going to be. They pre-announced the quarter. So the comparison to estimates, for example, I don't think is very important with this company. But, you know, let's have some perspective here. Stock went out at $10 a share when it did its IPO almost a year ago. The secondary, remember that stock went up, look at that. And then secondary, I think it was in February or March, again at $12 a share. So the company's selling a lot of stock at 10 and 12, now saying they're going to come back and buy some here at $2. But certainly using the cash on that share buyback will help support the stock a little bit. But look at the sales for this company, what the sales are like over time in a year-over-year basis. You see this company actually is seeing the change in sales. You know, a 3% rise in sales might be nice if you were expecting a 2% rise in sales. But that's the trajectory of growth at Zynga, and that's not very good. Big games like Farmville that they've had have just not really performed for them. We've seen their aging of some of their games over time. And so the other big thing to look for here are bookings, not revenues, but the actual bookings, the new revenues coming in. And we've seen for bookings that they've fallen again. Those should actually be percentages there, not millions. But my mistake there. But anyway, 15% decline, 31% decline. You've got 5 quarters in a row where you had bookings decline, and that's a problem.
What does Mark have to say about it?
Well, they're making some big changes in the business, obviously putting some cash back to work, buying shares back. They're laying off staff, they're shutting offices, they're getting rid of a lot of the games they were trying to make to try to focus on those that they think were going to be hits. But, you know, I have to say that when I talk to investors about this stock, not just the company, but the stock, they point to that $12 secondary, and look who was a seller in that. You know, no one bigger than Mark Pincus. The amount of money that he sold, you know, almost $200 million of stock sold in that secondary offering. That's an issue for this company because they're going to have to do some things to gain credibility with Wall Street to support that stock. Mark Pincus certainly took a lot of money off of the table early this year. Who knew what the results were going to look like later in the year? But he certainly wasn't sticking around to find out with at least $200 million of his dollars.